I'm Tom Anderson, a senior business advisor with Ferguson Alliance, a boutique business advisory firm focusing on family businesses. And today I want to share some insights on federal and state tax issues for owners of family businesses. In almost every survey conducted among family business owners, one of the most highly ranked issues is the reduction of federal and state taxes. In 24, there are several new tax law changes that have either been enacted or are posed to be considered by every family business owner. They should be. One of the most notable changes that hasn't happened yet, could be a big hit to corporations, is an increase in the income tax rate from 21% to 28%. If enacted under the quote-unquote fairness rationale that we hear so much about, U.S. corporations will be among the top 3 highest taxed in the world. The most notable 24 changes that actually are now in place. The federal limit on business loan deductions will now be 35% rather than 30% of the adjusted taxable income, so that's a good thing. The federal election for the first year special bonus depreciation, which we've all enjoyed going back in 22, it was 100%, and 23 it reduced to 80%. And unfortunately, that decline continues to 24 at only 60%. So there still is a 179 deduction, which is favorable, but recognize that that decrease is occurring. Self-employed and owners of LLCs, S corporations, other pass-throughs could deduct 20% of their federal qualified business income with taxable income limitations for joint filers of $384,000 and $192,000 for all others. Another important change, the 24 federal standard mileage rate for business driving reimbursement is now 67 cents per mile, ever higher due to inflation and other costs that we know so much about. Clean energy credits to offset tax liability. One thing that's kind of fun now is that you can actually trade those credits for a monetary value up to 11 credits that you're qualified for. So there's an active market that's been developed in trading, selling, buying, whatever those credits. So that's something to learn more about. In 24, the state of Texas, a taxable entity whose annualized total revenue is less than $2.5 million is no longer required to file a no tax due report. And so you won't owe any tax, and you also don't have to file the report. So that's some good news. And finally, for family succession planning, it's very important to know that the federal estate and gift tax exemption of approximately $12.9 or $13 million will reduce to $5 million after 25. So succession planning around that change is huge, and I would certainly stress that everyone give it some reflective thought, even if their thoughts around succession planning or further out. It may be time to really speak to your advisors and understand the benefit of acting sooner rather than later. So as I mentioned, it's best to consult your tax advisor for how each of these tax law changes may impact your federal business tax liability or state. And contact us at Ferguson Alliance if you'd like to support or would like some support to identify a qualified tax advisor for your business. You can find us on LinkedIn or at ferguson-alliance.com. Thank you.